Hey, what's up guys, Michael here. So, as you most probably know, there are many aspects of trading that remain taboo. This is especially true when some brokers, manufacturers of expensive trading systems, or anyone else have a vested interest in keeping your knowledge of a certain essential forex related things very low. So actually, not many people in the forex spectrum will tell you about the uncomfortable dimensions of becoming a professional trader. And that is the purpose of this video. So let's begin. Number one, you don't have to be extremely intelligent to be successful. And perhaps one of the biggest misconceptions about professional traders is that they are understood to be extremely smart and intelligent, with out-of-planet minds who have superhuman abilities to make money in the financial markets. Well, however, this is not true. Many who are successful in this dimension often did not even attend or graduate from college. In fact, being successful in trading is dictated by a psychological rather than a technical or analytical factor. You don't need a degree to be a professional forex trader, and you certainly don't need a deeper knowledge of differential calculus. So don't get overwhelmed by the endless amount of complicated trading systems and scary-looking indicators that look like they need Einstein to understand them. You need emotional intelligence and the ability to control yourself in face of constant market temptation. And you don't need to be a mathematician or economist. College education has nothing to do with trading success. So, number two, people are not naturally predisposed to trading. While it is true that some people have a slightly better predisposition to be a little bit better amongst other traders, it is also true that it is mostly the right mindset and habit that people lack to enjoy consistently paid profits. In fact, the lack of these traits makes us human beings by nature in a lost position. The evolution took much longer to develop some primitive self-preservation instincts in the brain that it did not develop more complex throughout functions that have only evolved in recent times. And it is the latter that we need for successful trading. When our real resources are in the line of fire, our brain essentially acts as if someone or some animal is trying to steal all the food we have worked so hard to obtain. So when we lose food, and in this case money of course, we become more emotional because unconsciously realize that we will have to work off those losses. And we also feel hungry. If these were the times of cave settlements, such a situation would probably force us to leave the cave and hunt another animal. Otherwise, we would starve to death. Fast forward a few thousand years and we will find ourselves in the 21st century, sitting at the computers and trying to earn money by clicking the mouse. So, in the age of computers and today's technology, we only live for about 50 years, and the possibility of online trading appeared even later. So this is why our mind sends signals to us during trading in the same way as in the old days, and this is the main reason why we want to take another position and make up for it, or why we come out with extremely high risk operations right after a big profit. To overcome this, we need to use our most advanced areas of the brain, such as the prefrontal cortex, which have recently been more developed and more suited to the planning process and to stay away from short-term temptations for long-term gains. It takes a conscious effort to success in the markets. You can't think that it is enough to trade as you want without the right plan and logic of your actions. If you trade this way, as many people do, you are most likely using these instinctive areas of your brain, rather than the one more engaged and developed ones that require a conscious mental effort to make them work. So, number three, you don't need to think in terms of percentages. One of the biggest trading secrets is that the percentage doesn't really matter to many of the individual traders. Just think of it. When someone says they made 100% of their account in previous year, what does this really mean? Percentages are not a significant measure of performance because the same number could mean that some newbie just got lucky in the market and turned $100 into $200. And the same number could mean that the forex professional was sticking to his plan and at the end of the year he had reached substantial profit, also doubling the invested capital. This is why percentage results mean very often absolutely nothing in the trading world, and that's because they depend on many variables. To explain it a little bit better, individual professionals are not in the habit of presenting their annual performance to shareholders, so they tend to approach their earnings on a monthly basis. So pay out their profits regularly and just live off them. Since they do not keep profits in their account balance is most likely not a good reflection of the accumulated profits of the year. Individual professionals do not track their account non-stop by determining how many percent they are ahead. Their accounts will rather have floating balances, depending not only on profits and loss, but also on how much of the account has been withdrawn. So, in fact, the account size and percentage of return are pretty much arbitrary in professional trading. A much better indicator is the risk-reward ratio, i.e. how much you had to risk to achieve a given profit. So this would be a much better way to compare the trading performance of multiple people. So professionals will only think in terms of risk and reward. Number 4, it takes a long time to be successful. It's probably hard to hear this type of slogan in most Forex environments. Most brokers and people who sell magic and miracle trading systems want you to think that Forex trading is trivial and that after a while you can treat the market as your main source of income. Of course, do not get discouraged because that's true. It is possible to make a full-time profit in the market. Many people live this way. Those who actually earn money spend many hours studying and made many mistakes at the start, which only allowed them to enter the brighter winning side of the market. Moreover, these people had to always be willing to look for answers to their problems and to implement these solutions. And often, these were not so much technical but psychological problems that blocked the possibility of early profit. And in my opinion, anyone can become a successful trader as long as they are willing to devote the right amount of work to it. However, you must consciously make enough effort to only take positions when you are prepared and not risk more than you can with a given position. So for most, however, adherence to these rules is practically impossible. Trading is not for everyone. Even if you are able to earn a living in the markets, this is not a typical 8-hour job and you never really know how much you will earn in a given month. A large proportion of people most actually are uncomfortable with this type of insecurity. So for this reason, traders like to set monthly goals with the exact amount of expected profit. However, this is not the way the market works. You have to act according to your best capabilities and grab every income that is within your reach. So naturally, in professional trading, there are months with high profits as well as months that barely break even to zero, or even months that are losing. So number 5, successful trading can be boring at times. Rather, this statement cannot be heard very often. Many people these days simply assume that the life of a professional trader is full of weirdness and filled with sports cars or a super active lifestyle. This is not always the case. The natural consequence of professional trading, which requires discipline, having a plan, etc., is that you are unlikely to experience big ups and downs, as is the case with the market novices who find it very easy to reset their account. Instead, a professional will rarely be surprised by any result, win, lose or draw. A professional is always prepared for any possible outcome before even creating a position. This is not to say that being a professional trader is not fun and a great lifestyle. It just looks a little bit different than most people expect. In fact, trading, if conducted properly, should be as unemotional as it is unemotional going to work overnight. Not every day at working is super exciting, right? Once you get to the point where you have eliminated all excitement from your trade, you don't feel pressured every time you create a new market position, and you don't get angry after each failed entry, you are on the right track. So, number 6, the more you need to make money in Forex, the more difficult it will be. Perhaps the biggest reason so many traders lose money over the longer term is that they push themselves a little bit too hard to make a profit. At the very beginning of the trading adventure, everyone should accept the fact that the loss is always the fault of the trader, never the broker or someone who said buy euro, sell dollar. It should be realized that losses are not the fault of someone else, and the only real opponent in the market is yourself. That is, all sorts of shifting thoughts flying in your head. Most traders enter the market because they think it is an easy way to make money fast. Quit your job and live on the beach, as we were speaking on this channel many times. Unfortunately, The reality is, as always, slightly different and is a kind of paradox. The more you want and need money from the markets, the less chance you will find there. So while an enthusiastic approach to trading is highly desirable, most beginners allow these emotions to influence their decisions too much. The excitement of entering the market means an emotional attitude which manifests itself in that you don't want to wait 2 years and watch your balance grow at a decent pace, and instead expect very quick returns every week, making you a millionaire. But again, the latter option is impossible, and these kinds of emotions make you lose out. You are exposing yourself to artificial self-generated earnings pressure, which result in forced market entries and extremely high risk-taking. You can earn more by trading correspondingly less frequently, as in the long run your ability to search for high probability positions will become more and more clarified over time, and you will naturally be able to filter out potential entry opportunities from your charts that have insufficient chances of success. However, until you have fully trained this skill, you will have to wander carefully and sometimes let go of the market entry when you are not convinced that a certain market setting is appropriate. So the last, number 7, the luxurious software and multiple screens are unnecessary. So most popular thematic websites tend to avoid saying that the best software or additional charting hardware is unnecessary to your happiness in the trading world. The truth is, most often all you need is a laptop and a free platform like MetaTrader 5 or 4. The most effective tool in your Forex armory is you, or rather your brain, not software gauges or screens on several walls of the room. And I'm not saying that they are useless. If you know how to use them, they are helpful, of course. But what I'm saying is that they are not necessary. If you are able to take over yourself and your own mental errors, you will already cover about 80% of the way to consistently realize profits. If you combine these skills with a trading strategy with high chances of success, such as for example price action, you will already have what it takes to be successful in the financial markets. So that is all for today, guys. Remember to follow LiteFinance on other social media like Instagram and TikTok. Check the description under the video, and if you like the video, then just subscribe for more.